Have you ever pondered what the split will do to the price of Tesla's stock? While many are anticipating Tesla's 3-for-1 stock split, different people have different ideas about what the price will end up being. To learn more about this, stay watching and tuning in. After the proposed Tesla stock split, some investors think stock prices would soar, while others don't think so. Investors and analysts place varying values on the electric vehicle company and predict varied outcomes following the split. You will witness the price reaction to the Tesla stock split today. Based on global sales, Tesla is the biggest manufacturer of electric vehicles. The company's ability to generate profits has increased recently as profit margins have continued to rise. Tesla has a strong financial sheet with a minimal amount of long-term debt and more cash on hand than it needs. Tesla's stock price increased when the firm announced its intention to split its shares in March. One expert, meanwhile, isn't sure the investor hype will hold for very long. The CEO of investing firm New Construct, David Traynor, stated that the action might potentially increase the market bubble that some stock watchers believe Tesla is about to burst. Tesla's efforts to pursue a stock split do not alter the fact that shares are selling at a valuation that is wholly unrelated to fundamentals. Traynor said even when the split drastically lowers its share price and gullible retail investors eventually flood it. Traynor said that the split's resultant lower price for Tesla would entice buyers to seize the chance to purchase and feed what he sees as a bubble. The intention to seek shareholder approval on a stock split comes as Tesla faces rising competition from legacy automakers rushing into the electric car industry. Stock splits occur when shares of a company's stock explode in price but are out of proportion to the company's core value. Traynor said that although Tesla only sold around 1 million cars in 2021 and is far from producing enough cars to warrant that price point, the company has to sell well over 16 million cars annually to justify its present stock price of over $1,000 per share. Here signs the meantime machine tool and manufacturing expert Sandy Monroe, an automobile engineer, has declared that Tesla had no rivals. Nevertheless, it is important to remember that the price of Tesla's stock fell even further in June. Since the beginning of the year, the maker of electric vehicles has seen a 45% decline in share price. A fresh wave of pessimism that swept the market in the wake of the Fed's aggressive remarks and actions intensified the most recent slump. Old investor favorites like Tesla aren't getting much love right now, which is not unexpected given that U.S. indices like the SEP and NASDAQ reached new lows for the year last week. Chief market expert David Jones of Capital.com stated that although the stock price has nearly halved from its 2022 highs of $1,200 per share, there may be preliminary indications of a base building ahead of that price. Right now, a lot depends on the sentiment of the broader market, given the uncertainty around the duration of high inflation and the amount of additional interest rate rises required to offset rising prices. Investors are unlikely to quickly return to taking risks. Right. However, the 600 range is still worth keeping an eye on as a possible floor for Tesla's stock. Investors with greater patience will be content to wait and watch to see if the overall state of the market improves this year. Amazon is among the firms that have already separated, and Tesla and Alphabet are among others that are preparing to do so. The crucial query at hand is that why do these large companies split their stocks? The basic explanation is that many small investors are unable to purchase stocks when share prices rise too high. Splitting can draw in additional small investors who are interested in purchasing the shares, even when it has little effect on the company's core operations. After the planned stock split is approved, do you believe the price of Tesla stock will rise or fall? Post your ideas in the space provided for comments below. The most crucial lesson for investors anticipating the stock splits of Alphabet and Tesla is that complicated factors can influence a stock's performance following a split. Amazon serves as an excellent example of this. It should be mentioned that prior to its early June 2021 stock split, Amazon shares were trading for well over $2,000. The company's share price was only about $100 after the stock split, which is far more affordable for individual investors. Others predicted that this would have caused Amazon's share price to rise significantly, but it didn't. Several reasons, of course, account for this. First off, general market dynamics have an impact on all stocks. The COVID-19 epidemic and the conflict between Russia and Ukraine are two global crises that have a significant impact on the stock market, making it volatile. Regretfully, Amazon chose to split its stock during a period when the stock market was collapsing. After a split, the stock price of the company is also influenced by its overall performance. For instance, when Amazon revealed its first quarter earnings in April, investors were not impressed. Both its own surplus capacity and inflation are putting pressure on the company's costs. These problems were not resolved by the stock split. It is crucial to remember that stock splits do not always make up for difficulties that businesses encounter. That's not to argue, though, that Tesla or any other firm preparing for a split won't see a boost in market value when their stock splits are completed. Having distinct business models and a different dynamic from organizations that didn't fare well following the split could also have a significant role that applies to Tesla, Alphabet, and Amazon, even while Alphabet and Amazon competitors in some markets. By the time Alphabet and Tesla split their stocks, the dynamics of the stock market as a whole might have changed. While Alphabet's 20-for-1 split in mid-July is quickly approaching, Tesla hasn't even announced a date for its anticipated 3-for-1 split. In any case, there's a chance that the general stock market will perform substantially better or worse than it did before Amazon's stock split. Again, stock prices are heavily impacted by the state of the stock market for Amazon, Alphabet, and Tesla. However, the most important factor is how much each company can expand in the long run. All three businesses have undoubtedly proven in the past that they're capable of producing rapid growth. They should all have promising futures. The financial services companies Royal Bank of Canada, RBGWS Group, upgraded Tesla from neutral to buy last month, which was great news for the electric vehicle manufacturer. Senior equity analyst at Morningstar, Seth Goldstein, stated that the most recent proposal from the Tesla board to authorize a 3-for-1 split is expected to be approved in August, when the company's investors are expected to meet. The analyst emphasized that our existing fair value estimate of $750 per share remains unaltered. We think lower production at the Shanghai factory, as well as startup costs associated with the opening and ramp up of its 2 new plants, will weigh on second quarter profits. Goldstein responded when asked about his expectations for Tesla's future performance, but we anticipate that profit margins will rise sequentially in the third and fourth quarters as production picks up. It's crucial to keep in mind that analyst and algorithm-based estimates like Tesla's stock projections are subject to error because they merely draw from a review of the share price history of the company. Future outcomes are never guaranteed by past performance. As a result, it's crucial to carry out independent research, study the most recent news on the EV market, and examine Tesla charts. Your mindset will determine whether you choose to trade to risk, your level of market knowledge, the distribution of your holdings, and your comfort level with financial loss. Trading with more money than you can afford to lose is never a good idea. Based on your personal research and risk tolerance, you should determine if Tesla stock is a good investment for you. Buying Tesla shares should only be decided upon after careful consideration of the company's financial standing. For your financial objectives, risk tolerance, target portfolio allocation, income, work status, and other comparable factors should all be taken into consideration when making an investment decision. For more of this information, be sure to check out Tesla stock and our other films.